I'm going to start with the capital account. The capital account, remember, it falls under silk, so it goes up on the credit side. The balance on your capital account is the one that is given to you in the trial balance. So I'm just going to put it as it is, which is the balance in the capital account. Let me just check on the credit side, the balance in the capital account, which is balance brought down. It's what has already been contributed, which is 55,400. Please note that we contributed another amount, which was 112,000, if you remember well from the previous video. So that will be on the credit side. It increases your capital by 112,000. You add the two, it will give you 167,400. Because there's nothing on the debit side, you will just put in balance carried down of the total, and balance carried down will be that 167,400, which is the new balance for your capital account. Next month, when you start the new month, our capital account balance will be that 167,400. With respect to your bank is an asset, therefore it goes up on the debit side when money comes in. It goes down on the credit side when you make a payment. So the balance brought down, or any balance at the beginning of the month for bank, will be on the debit side. Well, it depends, as a matter of fact. If it's positive, it will be on the debit side. If it's negative, it will be on the credit side. For grade 9's sake, it will always be positive, therefore it will be on the debit side. The bank account, though, it will always be the same. On the 31st, we will post total receipts to the debit side of your bank account. Your total receipt is simply the total of your bank account in the cash receipts journal. I will quickly go to the cash receipts journal and just show you what I'm talking about. So in the cash receipts journal, this is what we will have. The total of your bank account, whatever you will have as your bank total, will be the one that we take to the debit side. So that 247,860 will be the one that we take to the debit side of your bank. And on the credit side of your bank account, we'll put in the total of your bank account in the cash payment journal. So that 155,250 will be the one that goes to the credit side, because these are payments that will reduce your bank account in your general ledger. So in your general ledger on the credit side, we'll have total payments, and our total payments in the general ledger will be 155,250. Balance carried down, I will simply take the total of the debit side minus 155,250. It will give me that 155,010. So to get that 155,010, I took this total, which must be the same as the total on the credit side, and I simply minused that total payment, and it gave me that 155,010. That 155,010 will be our new balance the following month. So in the following month, it will simply be our balance brought down, which is 155,010. Loan is a liability, so it falls under self. Loan will increase on the credit side, so it's a minus plus. Already we had a balance on the loan, and the balance on the loan was 17,000 rand. It was increased by the loan amount we took during the year of 33,000 rand. However, it will be decreased by the repayments that we make towards this loan. And when you go to your CPJ, you will realize that on the, let me just quickly go with into your CPJ. Um, it was on the 25th, if I'm not mistaken, where we made a loan repayment. It was on the 27th, sorry, where we made a loan repayment of 45,000. That loan repayment, any repayment towards the loan will reduce the loan account on the debit side. It will go down on the debit side because it's minus plus. And all I'm going to do is simply to total both sides. When I total the credit side, I will simply take that 17,000 added with 33,000 will give me 50,000. And I will simply take that 50,000 minus 45,000. It will simply give me 5,000, which is my balance carried down. That balance carried down will be balance brought down for the following month. We've got equipment. Equipment is an asset. It falls under debt, therefore it's a plus minus. There was no balance brought down for equipment. Actually, there was, and I don't know why I put it as 31st of April, which was 10,000. It was supposed to have been the 1st of April. Because we do not buy any equipment, that amount will simply be your balance carried down. Please note that drawings will increase on the debit side. It falls under date. It's actually the first D, which stands for drawings. We had a balance carried down for drawings. Actually, we didn't in this case. It's only the 41,400 that was taken by the owner. I will simply go back and show you how we got the 41,000. It is made up of the 6,000, if I'm not mistaken, it was 6,000. The owner actually used to pay for rates and taxes for their house. So that amount will qualify as drawings. And then the owner later on took 35,000. It was, I'm trying to find it quickly. It was the 6,400 you added with that 35,000. So it is the 6,400 plus the 35,000, which will give us our total drawings. So when you add these two, it'll give us our total drawings. And our total drawings obviously will be on the debit side. Drawings represent anything that the owner took from the business for personal use. Because we didn't have any other drawings, that will be balance carried down. For the 1,400 will be balance carried down, which becomes balance brought down. That will be on the debit side. Current income, I'm gonna go to my CRJ, and in my CRJ, I will simply take the total and the current income. So the total of current income is this 8,220. That 88,220 will go to the debit side of your current income account. Will go to the credit side of your current income account. That is because income is actually minus plus. Income falls under silk. It increases on the credit side. It won't have any balance. Similarly with your interest income, I won't do that. It will go up on the credit side because it's income. Just to show you where that 2,320 comes from. It comes from the transaction that took place on the 25th of April. So that's why your interest income will go up by that 2,340, and it will go up on the credit side. Okay. I wonder what's going on here. Oh, that's why we have for current income, it will be 2,340. Then we're going to have commission income. Commission income will be the same thing. You're going to take the total and the commission income, which is 12,300. Consumable stores is an expense, so it is a plus minus. You will simply go to your cash payment journal. In your cash payment journal, you will simply take the total of consumable stores, and that will be 14,440. Because it's an expense, you do not balance it as well. For wages are expenses, so it's a plus minus. Wages will go up on the debit side. So you'll have the date, which is 2022, April the 31st. Remember, the general ledger will always be prepared at the end of the month. Under details, you'll have bank. Under for you, you'll have CPJ. And the total for wages will simply be in the CPJ, which will give us 6,015. Just to show you where that 6,050 comes from. 6,050 will simply be the total and wages in your CPJ. And then we're going to have rent expense. Rent expense, it's an expense, it's a plus minus. It goes up on the debit side. And then we'll have water and electricity, which is 4,500. Bank charges will simply be 2,420. All of these are expenses, therefore they go up on the debit side. And then we're going to have our trial balance. Now, our trial balance, this is what we're going to have. All the balance carried downs will go to that side. You realize that a balance brought down, as a matter of fact, for capital was on the credit side. That's why that 167,400 is on the credit side. Balance brought down for bank was on the debit side. And that's why you will be on the debit side, which is 155,010. When you add the debit side and the credit side, they must give you the same balance. And the balance in the trial balance in this case will be 275,260. Hotel.